around, we usually have the startups on stage nervous. Now they get to ask the questions. Next up, we do have Tamim El-Zain is going to be joining us on stage, giving us their thoughts on, what it is that they do. And of course, as you can imagine, the startups are probably going to have quite a few questions for you. So straight to you on the stage. You got your 5 minutes. Impress, because we want to see what you're about.
Thank you so much. Morning, everyone. My name is Tamim. I'm one of the founders of Seedstars Africa Ventures. And I'll actually start with a quick story. Back in 2015, I started a company in Guinea-Conakry. Well, I'll make the story super short. That company failed. It failed for a number of reasons. Of course, as you can all imagine, the lack of funding was one. But it was a very interesting learning experience because I realized how far in most places in Africa, everybody lacks the mere understanding of what a startup is, what it takes to actually build a successful one, and what entrepreneurs actually need in terms of support relating to the question that the jury asked before to put them on a path to success. And so that was really back in 2015, the starting point for me into thinking, well, how do we build a fund, the ideal fund that I would have liked to meet back then, and bring everything in addition to capital to support entrepreneurs. So I assembled a team with my two co-founders. So Maxime has worked most of his career in Africa. He led Blue Orchard Finance, invested 200 million across the continent. Bruce set up the family office of the Chandaria family in Kenya and invested in all the landmarks companies, startups across the continent. And together we decided to build this fund. And we wanted this fund to do something relatively unique. I mean, there's an increasing number of small VCs on the continent doing pre-seed and seed, and that's a great thing. The reality is that we need to take companies from that level to the next level up, and for that you need to have large funds. And you need to have large funds to actually address three issues that we're seeing on the continent. So that equity gap between the pre-seed and the later stage, like I just mentioned. The geographic focus. Today, 80-something% of the VC funding goes into four markets: South Africa, Egypt, Kenya, Nigeria, as you know. But also the third and fourth point that we're trying to address is the fact that a lot of investors are trying to replicate things that they know from their home markets, whether the US, Canada, Europe. And I think African VC calls for some very specific mindset and approaches and looking at deals from an African lens. So for these four reasons, we decided to build a 100 million fund that will be able to do late seed and Series A with leading checks of 250,000 to 2 million initial ticket, reinvesting up to 5 million. This is something that is super scarce to this date in Africa. And with a large fund, we are able to effectively cover more than 4 countries. So we have partnered with an accelerator called Seedstars. Seedstars has been around for 10 years on the continent. They have presence in 25 countries. And they have built a support infrastructure to really help entrepreneurs with everything they need on the continent, from PR and communication to recruitment support, operational business development. So we have all these resources in-house to support the entrepreneurs. And last but not least, I think really we are trying to bring both African investors and foreign investors to be able to analyze companies for what they are and not try to fit them into boxes that everybody expects from them. I'll clarify this point. I think it's super important. We are investing, of course, in tech and digital startups. It's great. We're seeing so many very talented entrepreneurs in that space, but we can also invest in sort of more traditional businesses that have very high growth, that are doing things in a way that's suited for the African continent. Most VC investors would stay away from typically brick and mortar models, right? We're seeing very innovative, very high growth models in that space that leverage just a tiny bit of tech to power these models. And I think this is something that very few investors on the continent can do. And thanks to our experience on the ground and our local footprint in the ecosystems, this is something we're able to do. Thank you.
All right, thank you, Tamim. Very informative, but I'll hand it over to our jury. Hello, you can start. Yeah.
Thank you. What value add do you provide beyond capital to the companies you invest in?
No, thanks. That's a great question. I think this is the key aspect of the fund, right? Is the amount of operational support we bring to the companies. So we do a number of things. So first, because of our partnership with SeedStars, we're able to offer ready-made, off-the-shelf acceleration programs. Through these programs, entrepreneurs will get access to a number of tools, a number of methodologies to do anything from growth hacking to building a proper reporting or newsletter to their investors. So that's something. Then the second thing is the number of resources that SeedStars has built over the last decade to support entrepreneurs, ranging, like I said, from, for instance, PR and communication people to really an HR team that's able to support them with any recruitment needs. It's something important. I mean, for instance, it will cost a startup $5,000 to $10,000 US to have on a retainer a PR agency, right? To maybe put out one press release every other month. We have these resources in-house, so the startups don't have to pay $10,000 per month on money to be able to get that. So these resources are super valuable for early stage businesses. And then the third part is also something we provide from the team, from within the fund. So we will help them with topics like governance, which is very important in order for them to be able to reach the next phase of growth. But also anything business development, internationalization, which in Africa, as you know, come in very early. These are aspects that we do ad hoc, one-to-one supporting with our portfolio companies.
Thank you.
Hello.
Hi.
Yeah. Just wanted to find out, how do you guys approach valuations and the terms of the investment?
That's a great question, and I think one of the things that we observed when we started out is like most investors invest as safes, and it's great. It allows entrepreneurs to get money in, but I think it's a very unsustainable situation because you raise 200K, you needed 1 million, you never know if you're getting the remaining 800, right? You never know what the terms are going to be, when the money is going to get in, and so you're always pushing that issue to a later stage, and you don't know how to deal with it. Our approach is actually to come in as lead or co-leads in preferably priced rounds, and to set the valuation of those price rounds. We have a number of methodologies, but I think one of the most that we tend to rely on a lot is comparables, right? I mean, we see around 3,000 deals per year, so we know where the market is, right? And typically, we are not, the kind of investor that will rely on Silicon Valley type of valuation to replicate on the market, because then it's putting extra pressure on the entrepreneurs, particularly on the milestones that they will need to reach to raise the next round of funding. And so we try to tailor that to specifically the African market so that the objectives that we expect from you, an entrepreneur, at the next round of funding are a good match with the valuation that we enter at in the current round.
All right, thank you so much, Tamim. Well done.
Thank you so much.
Well done. Thank you. Thank you. Thank you, startups. Fantastic questions coming in. I think the way you're asking, you're thinking about your fellow, members in the startup teams who have some real questions that they'd like to ask some of the VCs and investors. Next up, Philip Kirikov, please come and join me on stage. You're up next. You're up for the grilling. I'm sure you've got a lot to share. Ooh, how is it up there in Successful?
That's what. Sorry.
There we go. Cool. There we go. That's for you. How's it going up there?
It's great.
All right. Fantastic. All right. Well, all the best with your pitching now this morning, this session. Cool. And we've got our startups ready to ask you your questions. All the best.
Fantastic. Okay. Great. So my name is Philip Kirikov. I'm the co-founder, CEO of Startup Bootcamp Afritech. And we are we're part of a global network of global network of accelerator programs all around the world. I'm the co-founder of the Africa program. Our mission is to scout, skill, and scale the most disruptive startups on the African continent. You heard Seed Stars talking about the accelerator model, so similar to Seed Stars, 500 startups, Y Combinator. We run a standardized program, but we're watching slides form. So we run a global network. We run a Pan-African program, which is based on standard cohort model. 10 startups are chosen out of a pool of about 2,000, and we run those startups through a 13-week program, which covers all the basic skills, but also helps them to achieve formative commercial contracts. We start with pilots, proof of concept projects, with commercial partners that have signed on to the deal. So at the end of the program, by demo day, the startups are able to announce that they've achieved significant traction against their stated goals, and that those are turning into paid commercial contracts that can move them forward. So in terms of numbers, we've had 70 startups in the Africa program. Well, there's 10 currently in our program in Dakar. So 60 startups have already completed our programs since starting in 2017. And out of those 60 startups, 90% of the startups are still operating today. So what we have now is really an unrivaled survival rate. But even more importantly is that of the startups that are surviving, the vast majority of those have not needed any follow-on funding post-program. So they are actually scaling on the basis of the commercial contracts that they signed. So these are viable, high-scaling, high-growth businesses that are not solely reliant on venture funding. Now, for the startups that have gone on to seek funding, there's 24 of these startups out of the 60 that have sought funding post-program. 100% of those startups have closed at least a partial round. Most of them have closed their full round. So we have obviously also an equally impressive track record of startups coming out of the program. So whether you're seeking commercial traction or venture funding or some combination of both, then we are producing really impressive results. Where we're going next is that, sorry, one final data point for you is that it's about $130 million worth of post-program funding has been raised by those 24 startups. It's not obviously evenly distributed, so probably at the high end of the high watermark for us is a company called Kuda Bank out of Nigeria. They're currently valued at over $500 million. They were in our program in 2018. But we have, out of the 60 startups, we have about 15 startups, so it's roughly a quarter, that are on track to hit $100 million valuations. So by African standards, we're one of the best. We would, obviously think we're in the top tier of programs. And so that's our accelerator model. Now, what I want to spend the rest of my time chatting about is our global vision for where it goes from here. Because if we really think about from a standpoint of, how do you move the needle across the continent, ourselves, Seed Stars, the other programs that are operating here, we don't have, we're still putting through just a tiny fraction of the number of startups that we need to. So we're working on a new concept that we've been piloting for the last 3 years in Amsterdam out of our global headquarters, where we're actually listing the whole portfolios on a public exchange called InExchange. And from that standpoint, it allows us to actually raise a lot more money. Instead of having to go to individual investors and try to fund each individual program, we can now pull in for an entire cohort of 30 startups, and we can scale that to each stack representing 30 startups. We can now do 10 stacks, 20 stacks, 100 stacks, 1,000 stacks. It can kind of scale infinitely. So the big big moonshot goal here is that by the end of 2030, so in the next 7 years, we want to be doing 1,000 startups a year in Africa. And try to hit 10,000 startups across the continent that are accelerated using this model of a listed exchange to fund all the startups, and that would give liquidity to investors where they can buy and sell their shares of the pool without impacting the underlying asset of the startups. So thank you very much, and with that, I'll wrap up.
Fantastic. Thank you so much, Philip. Over to our jury. Francis, I'll start with you this time, if you have any questions.
Yes, thank you. It's a pity we could not see your slides, but thank you for that. What is the differentiator? I wasn't able to really get that between yourself and the rest of the funders in the space. What makes you stand out? That's one thing. The other one is, which parts of Africa are you mostly focused on? Or are you covering the entire Africa? Are you in the east, west, south? Where exactly are you found? And lastly, how do you find your startups? How exactly do they find you? Thank you.
Fantastic, thanks. Thanks for this question. So, first of all, I think the question was, what's our focus is Pan-African. So we take startups from all across the continent. Thus far, our portfolio has included startups from 13 different countries on the continent, but we receive applications from more than 54, so all the African countries plus beyond. In terms of differentiator, first of all, we are very much supportive of the other programs. So we are very collaborative with all of the other accelerator programs. In fact, we actually offer mentoring programs to many accelerator programs on our methodology. But the key reason that startups do choose to come into us is because of the hands-on interactions. So in that 13-week program, each startup will get 12 to 15 hours per week of intensive involvement from ourselves, and we have 5 full-time entrepreneur in residence that join the program to focus exclusively on the startups. So they will, there's one that's a biz dev, one that's a finance, one that does tech, one that does growth hacking. And so each startup that comes into the program now has basically an additional team of 5 full-time people that can help them to achieve those goals. And that's how we get that 18 to 24 months worth of growth achieved in 3 months that can support you in figuring out those pivots and that execution. And then we also have the commercial relationships to be able to walk you into government, to corporations, to high-level opportunities. And those are organizations that are eager, they arrange with us in advance that they're seeking to do pilots. So they give us a challenge area, we go out, we find the startups that can solve those challenge areas, and then over that 13-week period, you get to test out your solution. And assuming it works, then you've already got the opening for the follow-on.
What criteria do you prioritize when selecting startups for investment beyond financial performance?
Great, thanks for the question. We call our program AfricTech. So around the rest of the world, the Startup Bootcamp programs are always themed around fintech or insurtech or e-health, digital health, et cetera. But our program is focused on African solutions for African challenges. And so when we find a solution that we think can actually move the needle, that can actually, that can impact not just one country or one community, but the entire continent, then we say, great, we want to take that startup, right? You may start small, and we may really try to focus it and validate it in one market, but the opportunity is that if it's not something that can scale to the entire continent or most of, then it's probably we're not the right program, that's not the right fit. Because even though we find that there's tremendous nuances and differences between one region and another region, there's also a lot of commonalities. And we find that solutions that people try to import from overseas to bring into Africa typically aren't nearly as effective as the homegrown solutions.
Thank you very much.
Sure.
Thank you so much. Philip Kirchhoff there from the Startup Bootcamp AfriTech. Thank you so much. Philip, quickly, how was it there knowing that you don't have your slides in front of you? You just had to remember everything. How was that?
So actually, the way that we train all of our startups is that you should always be able to pitch without any slides, right?
Oh, come on.
And the idea is that if you know your business, and actually Nikki is one of our founders, like she'll remember these long days, but we spend the first 10 weeks of pitch practice without any slides at all. So you should always be able to tell your story, get the message across, and then the slides are just there for a bonus.
There we
so,
go.
yeah.
It's just that extra comfort that you have. But you know what? Philip is right. When you know your business, it is your business to know your business. Yeah. So whether you have your slides or not, you may forget 1 or 2 things, but that's also okay. On to our next VC/investor who's going to come up and pitch. We do have Scott Young who's going to be joining me on the stage. Scott, please come along. In fact, I think, Scott, you might have done a bit of grilling yesterday. Yes, you did. Proudly nodding his head there saying, yes, I was one of the VCs grilling our startups. So I guess the tables have turned. Enjoy.
Hello. Okay. Hello, everyone. So I wasn't actually supposed to be up here, but Christoph had a slot and he kindly offered it to me. So I'm a partner at Digital Africa Ventures. We are, one of South Africa's first black female-founded venture capital firm. It was co-founded by Thandeka Gaba in 2019. Fund 1 was a $2 million fund, sole LP from SASME Fund, and invested across 5 startups focused solely in South Africa and in the tech space. We are now launching our second fund, which is a $15 million seed fund, Pan-Africa, with a strong focus on underrepresented founders. So what is an underrepresented founder? We've classified it into 3 broad categories: black, female, and local. We believe those need more capital, and what's the word I'm looking for? It shows, in the returns as well. Actually, females are better allocators of capital than males. There's been vast studies on that, and it's about supporting the locals on the continent. So we have been engaging with quite a few institutions. Discussions have been going well. Committed to date, we've got 15% of our fund. We're hoping to do a first close end of February, early March, and then a final close in June. So what does Digital Africa Ventures do? So we invest at the seed level. We'll invest ticket sizes around $350,000. First ticket, 65% of our fund will go to initial tickets. So we're going to have about 24 companies in our portfolio, and 35% of that will go to follow-on. The follow-on, obviously, is those early stage tickets, are going to have to provide some good metrics for us to follow on, but there is 35% reserved for follow-on. We provide quite a lot of support around beyond capital. So we do CFO as a service. We've realized that a lot of startups come with tech and product mind, but not really on the financial sides. And in the venture space, raising later rounds, that's super important to get sorted out at the beginning. Board formation, we've done courses on the Companies Act and